Good morning and welcome to today's pre-market report. Now in today's pre-market report, we'll be taking a look at the Nifty expiry, at what option buyers and what option sellers can do. But before we go into the price levels and all, let's take a quick look at the news which will be affecting our markets today. Now one of the news which will be affecting our markets today is naturally how the American markets performed last night. This is that started off on a neutral stance, but as the Federal Reserve Chair Jerome Powell spoke, they only went further down and down. I say this as he made three statements which really affected them. Number one, that the economic impact of tariffs are going to be likely larger than expected. Number two, the Fed is not going to be influenced by any pressure Donald Trump tries to put. Number three, he was asked if the stock market plummets, will he do anything? He said no, he's not going to intervene at all. So these three made the American markets do quite badly. And right now, as of when I'm recording this video, the gift Nifty is also not doing that well, but we'll have to see if that changes as time passes. Now, on the international news front, the only other news is that Donald Trump has been tweeted that there has been big progress made with the Japanese delegation, but according to me, this is simply him putting out the fact that he wants China to contact him, and he's trying to show that he's making deals, so they try to feel like they're missing out on something. So that's really it on the international news front. Now we come to our Nifty expiry. Now, yesterday, a lot were wondering when when the 245% tariffs were announced on China, the Indian market decided to do well. Post that, it ended up having a rise rather than a fall. And I had tweeted about this last night that according to me, it is, as people are believing that there's going to be a shift of, let's say, if Chinese are exporting 10 products which they cannot export now, India is going to get at least 8 of those products to the US, so India is going to get work on that front. I have no doubt that some of that will happen. I'll say, will India get about 4 of the products, but not the full 8 or 10. But what most are not acknowledging is, number one, the current tariffs issues have caused a slowdown in the already current order book, as a lot of companies have said, let's say if they'd ordered 10 items of this to be delivered, let's say end of April, they said now we only want 4 items, we'll take the others maybe later. So that is going to cause a hit on everybody's basically financial books of all companies. And number two, even if India was able to fill some supply gaps to the US, it's going to take a lot of realignment, as the factories will have to get additional items and everything. And so I believe whatever happens, that these tariffs will end up having an effect on the financials of most of the firms in the stock market in India for the next 1 to 2 quarters. So these small excitement moves are just temporary. As whatever happens in the medium term, I see more pain for stock holding. The index might do its own thing because it has always done its own thing. The Nifty and Bank Nifty, for example, if you look at it, generally it has really not reflected what is going on in the larger, broader stock market. So I expect that the larger, broader stock market will not continue to do well in the next 3 to 6 months, due to simply that as the guidance has come out, then the new financial numbers of the next quarters come out, it will show the effect of this, and the stock prices, someone who might have bought a stock at 1,000, in 6 months they might be trading with it at 900 rupees. So in the end they'll end up losing. But that is a bearish view, but it is how I look at the whole picture, and is one of the reasons I'm not touching stocks as of yet. So now, for that, now let's take a clean look at the Nifty index. Now yesterday I had given clients first price target of 23,450, and we went and stopped exactly there. Now that resistance level still holds, as we basically can see it went to roughly 23,439. It closed at 23,439, but it had made a high roughly just, I think, 2 or 3 rupees below the resistance target I had given. Now I look at it in one simple way. 23,450 is a very important resistance. Then there's a very important support at 23,200 and then 23,260. So the zone between 23,200 and 23,450 is going to be a box range, and any moves within this zone is going to be for both sides. It's not going to belong to the bulls, it's not going to belong to the bears. It's simply a box range move shaking off all the weak hands. In between there's also a support of 23,380, but that one is more of a very weak intraday support and not something that's solid. Now, the big move will come either if we break 23,450 or we break 23,200, my point of view. If you break 23,200, then 23,120 is the first stopover. Break that, then 22,970, 22,900, 22,840. Or the other, if we break 23,450, then 23,540, 23,600, and all the way above. So my trading plan as an option buyer is between 23,450 and 23,260 rather. I won't hold any bias. I will trade short and long. If we break 23,260, then between this and this, I will just exit my trades, as this can cause a lot of sideways movement which will kill any option premiums. I will only re-enter if it breaks then 23,200 with a target of 23,120, then below if it goes that way. On the other hand, if it breaks this, option buying then upwards, target 23,540 and 23,600, very important. If it breaks that, then it can go until 23,750 easily. If it breaks that, 23,850. That's my option buying. Now, what's my option selling trading plan? My option selling trading plan is basically, I'm going to end up, I'm going to play aggressive. It's all going to, number one, decide on how we open. If we open around, let's say, this zone, then I will play cautious. If we open around this zone, then I might play aggressive on the call sell side, but cautious on the put sell side. So if I'm going to play aggressive, I'll sell calls above 23,450 and puts below 23,200. If I'm going to play cautious, I will go and sell calls above 23,600 or 23,540 and sell puts below 22,970. And then towards the end of the day, I will go and start selling nearer. So I'm looking at the Nifty index in that way. It is a bit of a tricky situation because the ranges have come very wide. We have a lot of gaps which have been happening. So due to that, it's a mix of, as the market is functioning, to decide whether you're going to go cautious or aggressive. And it's a must that basically you put profit stops as soon as your position enters profit, as this market is going to be very fluctuating. Another thing, I'm going to stick to my thing which I usually do in a lot of expiries. Once the option has come very cheap, I don't see much premium left, let's say there's 5 rupees premium left on the whole thing, I exit and take my profits. Why? Because that last amount is really what, towards the end of the day, if a sudden move comes, you will end up losing a big chunk of profit for 5 rupee, which is remaining. So that's how I'm looking at it. But I would say be cautious, as the moves can be rather volatile towards at least the latter part of the day. And that's really it for today's Nifty Expiry video. If you liked it, then hit that like button, subscribe to the channel, and click the notification bell. Thank you.